risk insurance is a specialist insurance designed to support multinational corporations who are either investing in or trading into other countries, particularly emerging markets, and to protect them against the unique set of perils and exposures that can arise by virtue of investing and trading internationally. The Ukraine-Russia crisis has been a learning experience, as we've been told, living this alongside our clients with many risk managers and treasurers and general counsels letting us know that they have been learning about which coverages they have. And one thing important to know, if they don't already, is that their property insurance is going to have a war and hostile acts exclusion on it. In other words, if there was to be property damage to their assets in a country that's undergoing crisis, then they would not be afforded coverage there. So in other words, and also I should mention in the marine market, several marine carriers have withdrawn what they call the war peril within marine coverage for certain jurisdictions, particularly around the Black Sea. So why I mention this is that essentially political risk insurance picks up where these other coverages drop off. And the idea is political risk insurance to plug the gap and to provide coverage for these types of perils, which they wouldn't be afforded with the rest of their property casualty insurance program. There's also something called forced abandonment coverage, and that is a scenario in which the client does not suffer property damage, but due to the security situation in a particular country, they need to abandon either a location, a region, or potentially the whole foreign enterprise of a whole country. And particularly with respect to the Donbas region in eastern Ukraine, as you can imagine, it's become virtually impossible for a multinational client to operate there. And so we are currently working on many forced abandonment claims. I would say also with respect to Ukraine, there have also been some seizures of things like agricultural equipment and stocks of grain. So it can cover expropriation, not just of the kind of historic de jure government, but the de facto government if a particular region has been occupied or taken over and is in effective control of another regime. So we're working through those claims as well. Clearly, we've been witnessing this deterioration in sort of Western or U.S.-China relations and this geostrategic competition, if you will, for a while, I would say since 2015 or 16. And if you were to really measure, political risk insurance rates or the view of political risk underwriters of China risk in 2015 as compared to today, it's essentially, night and day. The rates have essentially doubled. And unfortunately, I would say even with, the new administration, which came in last year, I mean, most, if not all of the foreign policy items, such as the South China Sea, Hong Kong, Taiwan, remain unchanged. And if anything, those tensions could potentially flare more, as we've seen the visit from Nancy Pelosi recently. So, even I would say as of today, the Taiwan capacity has really dwindled. Even just a couple of months ago, it would be very easy to secure coverage for Taiwan. And I would say today, it's very challenging to get any capacity for Taiwan. Maybe 20, 30 million, 40 million, but I would say it would be very difficult to raise something extremely meaningful for Taiwan. So, our recommendation to multinational organizations is really to think a couple chess moves ahead and to take out the insurance before you even sort of think you need it, because once it's on the front page of the Wall Street Journal, it's essentially too late, that the underwriters are not going to be willing to offer coverage, or it's going to be very expensive. But to really go out to the market when capacity is plentiful and rates are reasonable, and in essence resign themselves to the concept that it is very difficult to predict these crises, and if they are a multinational corporation, they are vulnerable to them.